Hey, beautiful traders, welcome back to my channel. My name is Desmond Samuel, and I am back with yet another episode of our weekly Forex Forecast. Now, guys, I just want to say a very, very big thank you for bringing me this far. I remember when I started this channel anyway, long story short, guys, I'm just about 50 subscribers away from hitting 1K, and I couldn't have done this without you guys. Thank you so much, guys. I sincerely appreciate. However, there's just a little work to do, guys. We have about 50 to 49 subscribers away from hitting 1K. So just make sure that you click the subscribe button, guys, and share this video so that every other trader like you, either an expert, intermediate, or even a beginner, can also see this video and also see the value that I'm here to offer the world, the FX world. All right, guys, I'm here to change the narrative. Okay, I'm here to make things easy for you. That's why I come on here every single week to give you guys what we call the weekly Forex forecast. So be sure to like, be sure to subscribe, be sure to share the video. And guys, like I said, I'm just 49 subscribers away from hitting 1K. All thanks to you guys. However, just get me across that finish line, and then I'm now rest. I now marinate my 1K, and then we begin to work towards 10K. All right. But to kick things off now, we have EURUSD. And by the way, I urge you guys to watch to the end because I like to shuffle the pairs. I might leave your favorite pair at the very end, all right, which is gold or maybe silver or maybe BTC or maybe the S&P 500. So just make sure you watch all the way through to the end, all right. So to kick things off here, we have the euro dollar up on my list now. So without wasting much time, we have been in this range since God knows. And guys, 2022, this is 2 years. We've just been bouncing up and down in this range for God knows what reason. However, long story short here, coming on the daily time frame, because now we want to be looking for day trading opportunities on this pair. Since the market just wants to be stuck in a range. And one of the benefits of using my approach is that even it works in a ranging market and then also in a trending market, and that is the best strategy that you want to adopt. You must come to terms with the fact that if you want to succeed in FX, you must use a strategy that works both in a ranging market and then also in a trending market. Back test, and have data, right? So for euro dollar now, we have a demand level which I spoke about earlier on, I think in my previous video. Yes, so this is around the 1.08000 region, and for the best part, I'm still waiting for this guy to dump all the way back down to this level so that I can smash things through the roof, right? Because I'm actually bullish on the euro dollar at the moment because the dollar index seems to be weakening. So now we have prior to this whole pullback here, we saw a fake out here. So this was a bullish candle, daily candle break and close above this range, and then we picked back down with a bearish engulfing candle, and then we're starting to point south. Now, ideally, I would like to see the market pull back to this bar right here. However, in the event that this doesn't happen, that in the event that we actually come on here and then break below here, this will be my next level that I'll be looking for, buying opportunities. However, I'm quite confident that the market is going to reverse somewhere around here, or maybe even pause and then give us some maybe 100 or 50 to the upside before now coming all the way down. But long story short here, I'm actually very, very bullish on this guy. And if I bring my flips like so, if I bring my guys, sorry, my phone is just vibrating. So if I bring my fib tool from swing low to swing high, you can see that it matches perfectly with my demand level, which I'm actually waiting for, all right, to get validated on this pair. So long story short here, once you go down to your 4-hour time frame, which is the 4-hour time frame right now, you need to see the market come on and then balance properly on this demand level. Let it balance well, and now give you an entry confirmation. So that entry confirmation could come in the shape of, or it could come as a counter trend line breakout or a 4-hour candle bounce. Do you understand? A bounce off of this level. Like, let me just show you guys something real quick. So you see this here. This was where the demand level was created before this rally up. Now, if this guy is going to reverse from here, it has to give you something similar to maybe a bounce of, you see this bounce here, or maybe a 4-hour candle break and close outside of the counter trend line like this. All right, like this. Just plot your level nicely. So you can now draw your counter trend line and then wait for the market to just break out. Once it breaks out, entries are here, stops below the structure. I don't care how how the pullback is or how the bounce is. You must always ensure that you use structure when you're setting your stop loss. Your stop loss must always go below structure for buying opportunities, and then also above structure for selling opportunities. So what you want to be waiting out for here is actually a deep back down here. Let the market balance out properly here, and then start looking for buying opportunities. Now, my first level target for this guy is obviously recent high here, which is 1.09482, and then once this is cleared there, we have space all the way to 1.10600. All right, so first level target for this guy is 1.09437, and subsequently we could rally into 1.10600, because I don't see the reason as to why we shouldn't, because by the time I think you guys through the extra, you cannot see, like, the reason as to why I'm actually very, very confident that we could actually blow all the way through the roof to 1.10600. All right, so that's that for the euro dollar. The next pair on my list now is the pound sterling, typically referred to as a cable. So this is it here. So likewise on the pound sterling, this is the daily time frame, I believe. Hold on, let me just double check. Aha. Hold on, guys. A minute. So on the pound sterling, I'm also bullish on the pound sterling. However, we'll be using some demand as supply levels for the moment, since the market is stuck in a range. All right, which is why I urge you guys to enroll for the course, guys. So you learn how to use a strategy that works both in a ranging market and then also in a trending market. So now we have series of higher highs. Yes, so this is a high. This is a high. Higher, low, higher, high, higher, low, high, high. So the next, the most recent level here is this demand level that the market paused. You can see that this was an impulsive move. However, it paused on here, gather momentum. You can see the bounce of it. So this was a daily engulfing candle. All right, this is the daily time frame. So this was a daily bounce engulfing candle that engulfed 1, 2, 3, engulfed the previous 3-day trading activities, and then started heading up since then. So what you want to do is wait for the market to come back into that same demand level after, because this was the first. So this is the rally-based rally. All right, so wait for the market to come in here also to retest this whole point, and then we can start looking for better opportunities all the way to the upside. So the first take profit point is recent high, which is 1.30448, and then subsequently we could rally into 1.2000 for the pound sterling. All right, so aside that, I don't see the reason as to why we should not blow out on this guy here. We have something that looks like an inverted head and shoulders pattern here, which is the head, shoulder here. So let me just bring this guy and put it like this. So you can see that this was a neckline here. All right, so this is head, shoulder region here. So neckline breakout retest, and if you prorate it, if you calculate the amount of pips from this head here to this neckline, it should be equal to the total amount of pips upon breakout. All right, so we have enough space to the upside. All right, so that's that for the pound sterling here. The market is almost at POI. So what you want to do is just wait and see. Scale down to your 4-hour time frame, or whichever entry time frame that you like to use. Wait for the market to bounce properly. Once you see that descent bounce around this 1.2800 region, then you can start looking for buying opportunities. Now, your entry criteria is going to be, like I said earlier, a bounce, a 4-hour candle bounce above, that is a bounce like this, a reaction off of this level, or a counter trend line break like this. Okay, or a counter trend line break like this. Entries here, then stops below, and then ride the trend all the way up. All right, and I see no reason as to why this guy should not rally all the way up. Hold on, let me just double check something. So from swing high, from swing low to swing higher, we do have a Fibonacci here. All right, so everything is pointing bullish at the moment. The trend is medium term bullish. You have your fibs bullish. You have your demand level bullish. All right, so this and they have the extra bearish. So this whole thing is just pointing to the upside. So you want to position yourself and make sure that you milk this. I mean, so far so good. I think this is the most enticing pair so far. This is the one that seems to catch my attention. I mean, I have like I have about 10 pairs to talk about today. However, the one that catches my attention the most is the pound sterling. All right, so just watch out, and once again, guys, check the link in the description, and then the pinned comments. It brings you straight to my Telegram community, and then also my email address. All right, so you can email me, and then also you can also join my community to see how we trade, on a day-to-day basis. All right, so that is that for the pound sterling. The next pair on my list now would be USD CHF. So USDCHF on the other hand has some decent opportunities. All right. So if you're looking for buying opportunities on USDC on the pound sterling, you could equally be looking for selling opportunities on the CHF price as well. So a quick top down on CHF now. So we have a trend to the downside here. All right. So this is the weekly time frame here. All right. So we have this double top here, and we'll be stuck in this range as well for about, I think, for about 14 years. All right, if I'm not mistaken. So we've been in this range now for about 14 years. All right. So this was 2010 all the way to 2024. So that is 14 years. All right. So now we have a trend here headed south. So this is double top, the neckline break and retest, and then this is a high, this is a low, lower high, lower low, equal highs, lower low, equal highs again. And now the market could even come in here to put in either an equal low or a higher low. But whatever the case is at the moment, I'm actually looking for certain opportunities on the USD medium term. So scaling back down to the daily time frame, you can clearly see that this was where the most immediate demand level here was here. So we have something called like a drop base drop here. So this is drop here, base, and then drop. Okay, so let me make it clearer on the 4-hour time frame. So this also goes to show that you don't necessarily have to wait for a breakout before you start trading. All right, this is a different approach to trading entirely. So you can also try this method out. It works out. It works. This has like an 80% win rate. All right, so this is your trend is bearish. All right, so you want to be looking out for supply levels because you want to be selling in a bearish trend. Okay, so now the most recent supply here is this one here, which is about 0.889200. So what we need to see is a decent pullback into this point here. So once you see a decent pullback here, which also correlates with the pullback on the across the board for XSS USD pairs. So once we see that pullback into 0.89200, we can now start seeing or scale down to your 1 hour time frame or 15 minutes time frame, whichever time frame you used to trade. All right, so look for that and then scroll down and then look for selling opportunities. All right, so my first level target for the USD CHF is this low around here, which is 0.87600, and then if and only if this level does get broken, then we can now start looking for adding to our positions here, which our next target will now be 0.84141, and then subsequently we could drop all the way to 0.76545, which also correlates with that with the 2010 low that we saw earlier here. All right, so that's that for USD CHF. And I've kind of noticed something that the CHF pairs have been bearish for a while now. So you might want to take this chance now. Okay, so long story short, I don't see the reason as to why this shouldn't play in our favor. So we do have a trend line here. So this is the first touch, second touch here, and let me see what it looks like on the 4-hour time frame. Okay, so we could actually rally into the trend line there for maybe like a third touch or something, and then I'll rotate downwards. All right. So but long story short, I'm actually very, very bearish on the CHF pairs at the moment. So the next pair now is CAD CHF. Similarly, the CAD CHF has been in a downtrend. Okay, it has been in a downtrend for a very, very long time. So scaling up to the weekly time frame, this is what it looks like. From the weekly time frame, I thought we were in for something here where we had like an inverted and shadow pattern here. However, it failed to hold because the neckline was not broken, which is here, and then it just melted all the way back down. And on melting all the way back down, it gave us a trend, which is it gave us a lower high here, which is also in line with what the other CHF pairs are doing. So in this case, I want to be looking for selling opportunities. So I scale down to my daily time frame like so. I look out for the most recent supply level here, which is so you can see that this in the case of USD CHF, we had a double top, but for CAD CHF, we are seeing triple top here. The neckline was broken here, supply was created here, and then pull back into it and then collapsed. Now this is a drop based drop. All right, so you want to also look back for this pair to pull back into this bar here, into this yellow bar here, which is around the 0.64911 region. And then once this is said and done, because now this also lines up perfectly with the Fibonacci from my swing high to swing low. All right, so once this is done, so this is a counter, this is a trend line break and retest that may potentially happen here. You now scroll down to your 4-hour time frame, okay? Because you want to use the lowest time frame possible for your entry so that you can maximize your your risk to reward ratio, because if you make your entries on the weekly time frame or on the daily time frame, what looks like a 1:1 risk to reward, if you scale down lower to maybe the 1 hour time frame or the 30 minutes time frame, you could turn that 1:1 risk to reward to something like maybe 1:2 or 1:3 or 0.5 risk to reward even. It is very possible. So in this game, it's all about using the tightest stop loss possible according to structure. Now, mind you, according to structure, and now to maximize, because now there's no limit to how much you can make. That is the condition in trading. There's no limit. So, but you want to minimize your exposure as much as possible. You must always think capital preservation first. So once you can preserve your capital, then you can make more money. All right, because the last thing that you really want to experience is a blown account. Not only does it set you back financially, but it also affects you mentally, because now next thing you see your typical trade setup, you will not be able to take it because you are afraid of blowing your account, and that you really don't want to be there. Trust me, guys. So we need to see a pullback to this bar right here around 0.64911. So once this is all set and done, we can now start looking for certain opportunities. First level target is 0.632886. Now, if this guy wants to create new lows, all well and good, we have space all the way to 0.61615. However, this was where the market reversed at recently, so you might want to be careful when you're shorting this guy. So the next pair now on my list would be, let me think, Ethereum. Actually, let's talk US oil. Okay, so I came on here last time to inform you guys on my bias for US oil. This is not the US oil chart I'm looking for. So I let you guys know what my stand was on US oil. I can remember telling you guys that I was bearish around this point. And now why was I bearish on this guy? If you go on the weekly time frame, you can see that this was a supply level here. Okay, ignore the lines, guys. I have to draw this line when I'm trading oil. Oil is an expensive commodity. All right, so this is what we have here on the weekly time frame. The trend has been bearish for a while. However, upon breaking out of this range here, we created this supply level here and then drop. Then I said to you guys, okay, fine, that if you can confidently blow through and come back here and pull back, I'm looking for certain opportunities because the market has reversed from here recently. And you guys know that in this game, that the past price action kind of like determines what the future price action might do. So you can see that any level that the market has had issues breaking to the upside previously, we might have the same issue in the future. So you mark out that zone and then wait for the market to get there and then you execute. So now, long story short, now I was actually thinking that this demand level was going to hold. However, you know how oil is. All right, so this thing is highly influenced by various geopolitical events. So you also have to be careful, and then also even after doing your own your technicals here, it's wiser to go on and then also be on lookout for any geopolitical event that might significantly affect your trade. All right. So long story short, for oil, if we do manage to clear out this bar around this 76.454 dollars a barrel, we could drop all the way to 66.784 dollars a barrel for oil, if and only if we manage to clear out this bar right here. Okay, so that's that for oil. Long story short, our TP got smashed. I think this was yesterday. Blew through this my tip here, which was somewhere around here. So we just blew through it. All right. Now it is pointing south. So we could even see, because this is even a lower high from here. So it is very possible. So we could actually see the market break back down below here and then expose the 66.19191 region. All right. I'll leave this guy for the meantime and then allow the market do what it wants to do. But mind you, if it does me, you can go back and check my previous videos. I break down these pairs like it's nothing. All right. So next pair now on my list now would be Ethereum. So let's talk Ethereum real quick. So for ETH, I think this was the chart I used. So for Ethereum, I have been calling Ethereum to the downside for quite some time now, and now the reason as to why I've been confidently bearish on these pairs is because listen, I know everybody is just gearing off if for the bull run. However, what people tend to forget is that whenever the BTC pair makes a new high, it tends to pull back deeply. And before every bull run comes a very very deep pullback. All right. So now you can see a new high was created. It dipped. Okay, it dipped all the way back down. So every single time the market gives you a new high, it dips. So now for Ethereum here, we came on into this supply level here. We failed to give an equal high to this point here. Instead we came to put a lower high from there. So now the market has just been sitting on this supply level here. So once I spread out to my daily time frame real quick, you can clearly see that this thing is looking a lot more obvious here. So now we have something like so this is a double top. Now whenever the market gives you a range, let's say double top head and shoulders pattern, whatever thing. Now, before it breaks out, it tends to at least move back at least half of the entire range length. For instance, now this is the right leg of the double top here. So this is the peak bottom. Now, before this guy breaks out, 9 times out of 10 times, it tends to actually come back and test at least half of the entire move, right? Before it now continues lower. Now, it turns out that half of the entire move was a supply level as well, which I marked out in my previous video. And once again, if you doubt me, you can always go back and check. Trust me. So this was the supply level right here. So this was where I was actually waiting for the market to come into, and it came on here, faked out as if it was going to head higher, and then followed by a very engulfing candle on a daily time frame. Now things have been pointing south, and are still pointing south. Now if you had not entered this pair here, so you still have some time, all right? So what, because I think it was a simple counter trend and break somewhere around here. So now we have something called an arc here. So what you need to do is maybe wait for this pair to pull back, if it will pull back. All right, so just wait for it to pull back here, and then make your entries somewhere around here. But as you make your entries, please do not make the mistake of putting your stop loss inside here. Your stops must always go above structure if you're selling, and below structure if you're buying. Okay, so for my first TP now, it's $2,877 per coin, and then subsequently we could drop all the way to 2001, at least $2,200 per coin for Ethereum. All right, so I see no reason as to why this should not happen, provided BTC dumps, every other pair in the ecosystem also dumps as well. So the next pair now on my list will be BTC. For Bitcoin, I also spoke about BTC dumping earlier on. So looking at this guy here, let me just bring this guy. I think he was Binance. I think I used Binance. So for Bitcoin here, it is also the same thing for Bitcoin and Ethereum. There's no way I'll be going long on BTC and then shorting Ethereum. All right, it makes no sense. Let me see. I'm not sure that's the one. I think it is this one. Hold on, guys. I'm just trying to be sure what chart supply I used. You know what? Just hold on. Let me just. What's this? All right, so guys, so this is BTC here, and BTC came on here and also equally failed to give us a significant, convincing higher high from here. Instead, it came on here to give us something like an equal high. So if you will now go on the monthly time frame, this now looks like a triple top for BTC, right? This now looks like a triple top for BTC, and it has been playing around this range. However, I'm quite confident that BTC could still dump. My target remains $43,000 per coin for BTC. All right. So now the reason as to why you're seeing the market play around here is because now we have something called early sellers. All right, so maybe it is just trying to stop out the early sellers before dumping, and then also we have a neckline. So this was a double top neckline break here. So maybe it was just also coming into to test this neckline here. But whatever the case is, I'm still very very bearish on BTC. And however, I will be resuming my trades once I see a decent breakback down below here. So once I see a breakback down below, and this is one of the benefits of using the counter trend line, guys, because now it kind of like serves as as a shield. All right, imagine entering this trade somewhere around here to short this guy, and then next thing you know, you're blown out of the trade. All right, so scaling down to the 4-hour time frame, this is how it looks. Okay, once we see a decent breakback down below this this whole level here, and then also this trend line here, it will be a lot easier to come on here and then shut this guy all the way down. So what I'm not looking out for is a breakback down below $62.904 per coin for BTC. Once that happens, guys, I'll be back here on my screen to alert you guys. Okay. First level target, obviously the recent low, which is around 53k per coin. Now once this is cleared, we have space all the way to $42.43 per coin. All right, it is possible. Don't doubt me, guys. It is very, very possible. You guys have been here. I called up BTC from 71k to 65, in fact self to 53. All right, so it is very, very possible, but do not panic. After every halving and before every bull run, and then also after BTC makes a major high, it tends to come for a deep pullback. Right, at least wipe out the small guys before you're not heading for the profit highs. So next panel on my list now should be, I think, pound card. Nothing much on pound card. AUDUSD has not been the cleanest of pairs. I was expecting this guy to give me something to work with. However, he refused. It just kept falling and melting out of the sky, which is not something I like. At least give me some decent pullback. But long story short, for AUDUSD, I think we could actually drop to one of the demand levels I spoke about earlier. So let me just go up to the higher time frame and show you guys how this looks. So on the weekly time frame here, this is how AUDUSD looks. Okay, so we have, this is it here, guys. Practically, this is it. This is that demand level that I was talking about here. Okay, so we have failed to make once again a higher high. Instead, we came on here to test this whole supply level and then drop, because this is a supply level here. So we just came on here to test it and then collapse. Now, mind you, we could collapse all the way down. However, from what DXY is doing, that is not looking possible. All right. I mean, I'm not saying it's not possible. It's possible, but it's just not looking likely at the moment. So long story short here, we are still looking. See, this is a higher low from here, a higher low from here. So this is still pointing bullish, and then we've been in this range for a very, very long time, guys. Just when you think AUDUSD is about to give you money, it just acts up. That's why I mean, to today, I don't know how people refer to this pair as a favorite. It just doesn't make any sense to me. Now, mind you, we have broken into supply levels here, beyond the supply levels here. So now you can see that whenever the market broke back down here, it came to test it and then continued, tested it, continued. So for my trades, I'm waiting for the market to pull back into this 0.66254 region. Then I'm looking for certain opportunities here, because this is also a decent supply level. All right, so I need to see the market come in here and test this level. Once it has tested and confirmed, then I'll now scale on to my 4-hour time frame, and then I'm looking for certain opportunities. All right, so my prime target remains 0.64747, which is about if I do the calculation, this is about, from here to here is about around 150 pips, which is something decent. So, but before that happens, we need to see this market pull back into this 0.66400 region, and then we now collapse this guy all the way on his head. All right, so that's that for AUDUSD in a nutshell. Nothing much, nothing serious. It just fell out of the sky. So you might as well just want to go with the trend. Next panel on my list is I think I should talk about NZD CHF. No, actually AUD CHF first. So for AUD CHF, because of what AUDUSD is doing, and then because of how weak how strong the CHF has become, this guy just melted all the way back down. Now I can explain what happened here. Just hold on, guys. So we rallied into supply levels here. This was the supply level that led to this drop. Now prior to this point here, the market gave us a reversal chart pattern, which was a triple bottom. So 1, 2, 3 triple bottom, and then blew out of the range. Now, technically speaking, when things like this happen, we ought to actually continue higher. However, Now, mind you, when you now look at the higher time frame, you can see that the overall trend is heavily bearish. Like, guys, this guy has been falling for a very, very long time. All right, very, very, very long time. So I mean, this is explainable. It is only usual that the market tends to come in and then create a continuation chart pattern to drop further. Because in this case, a double top in a downtrend is obviously a continuation chart pattern. And then this happened around a supply level as well. So now, long story short, we have a double top here, which is a continuation pattern to the downside. Now, scaling down to the lower time frames, actually, you want to be looking out for selling opportunities on this pair. So scaling down to the lower time frame now, we have a double top here and neckline break. Now, mind you, we do have some supply level inside of here. All right. So what you need to do is have two charts open. Now, this I like to trade. I like to have two tabs open. So one pair for my levels and then one pair for my regular rally based rally and then drop based drop. All right. So now coming down here, I have this level carefully because now if I look once again, whenever the market gives you a range, it tends to pull back to at least half of the length of that range. Now, taking into account that we have a neckline break here, however, the market could easily come in for a supply level play, which is somewhere around here. Okay, which is somewhere around here. So the market could easily come in here to test this supply level before collapsing further down. All right. So long story short, here we have a downtrend on a lapse, and then we are here to actually look out for selling opportunities all the way to the downside. So I like to see the AUDUSD pull back into 0.59400 region. So once this is all done and dusted here, which I believe is from swing high to swing low somewhere around here. So once you see the market pull back here and balance properly, we can start looking for selling opportunities all the way back down. Now, I kid you not, we could easily see this guy drop all the way back down to this low here, which is somewhere around. Guys, this is about, I think it's about 400. Now let me just go up a time frame and see. So now whenever you're confused, okay, just go up a time frame, just zoom out a bit. So we have space to the downside here. However, you also want to take note of this supply level here. So guys, you have to be very, very careful when you're trading here. So we have a supply level here as well that not priced back down here, not priced down. All right, so easily we could even so we have two levels here. If this level does not hold here, which is around the 0.58734, we could easily come into 0.59331 and then collapse further. However, mind you, I think preferably I like to go with this one, which is 0.58790, right? Because this also lands out well with this whole move here. Okay, so and then this was also previous supply here, which help price down. All right, so I'll be waiting patiently to see the market pull back into 0.58790. Now, once that is done here, I'll knock this guy down all the way back down to initial lows, which is about 250 pips here. So we have space. So my first level target is obviously recent lows. Take out this low and then we have space to 0.56140 on AUDUSD. So next pair now on my list is NZD-CHF. NZD-CHF also has a similar setup to AUDUSD as well, because the NZD-USD has collapsed totally. What we need to do is also look out for a pullback. All right, so once you see a decent pullback on this pair here, we could actually drop this guy on his neck. Now we could pull back all the way into this into this 0.5500 region and then continue falling, because this was where the supply level acted in the most. All right, so next level now, next target, next pair on my list rather, guys, is I have touched USDJPY, I've touched CHF, I've touched Ethereum, BTC, US oil. Next pair now is the S&P 500. So recently the S&P 500 began to pull back after like so many months of being on a very, very bullish trend. However, we still have some more space to the downside, and if you're the type that likes to trade a counter trend line, so you got a counter trade counter trend trader. Yeah, so what you need to do is come on here and wait for the pair to rally into these supply levels here and then knock this guy all the way back down. However, now mind you, like I said earlier, you want to be trading your supply and demand in the direction of the trend. So I'm not confident about this one. However, if you want to go ahead and take it, all well and good. I'm just saying that we have other pairs that are actually in line with the downtrend, which you can trade, which is the CAD CHF, USD CHF, Ethereum as well. However, if you want to test this out, all well and good. However, I choose to wait for Ethereum around for S&P 500 rather, guys. I'm so distracted, guys. Let me just turn my phone down. All right, so I choose to wait for the S&P 500 at 5,280 basis points for this guy. Now, once this is all done and dusted, we have a decent balance here, because also now, mind you, you need to understand that this pair, you see Nasdaq, you see the DAX, you see S&P 500, they have been bullish for years and years and years, guys. If you see any pullback, if you see any downtrend, it's just a pullback. These guys have been bullish, and you stand a better chance of making money once you go with the trend, because you don't want to lose your initial capital that you ought to have reserved for the proper quality setup. All right, so this is from swing low to swing high. Here we have a decent demand level balance right here. So the market has to come into this level here and then give us a decent entry criteria. Once this is fulfilled, like a bounce or counter channel break, I'll be here once again to let you guys know. The next pair on my list now is let's talk USD JPY. Let's talk USD JPY. So for USD JPY, we saw the market pull back deeply into our initial levels, which is all well and good. I'm still very bullish on this guy. All the time frames, we are actually very bullish. Monthly, weekly, daily time frame is pointing to the upside. So however, we could even come in for a deeper pullback to maybe this demand level somewhere around here. If this other level here doesn't hold, we could easily come into this one and then blow out, just to stop up from some early buyers. All right. However, once you go down to your daily time frame or the 4-hour time frame, what you should be looking out for is for entry opportunities to the upside, because I'm still very bullish on this guy. I see no reason as why you should try shorting this guy. This guy is still gonna head higher, believe me. So once the time is right, just wait for a counter trend line break here. So once you see that counter trend line break here, you cannot enter. So stops are always below structure. Remember, guys, put your stops below structure. First level target is a recent high, obviously. Then subsequently we could blow all the way through to 178, a region. So that's that for USDJPY. So next pair now on my list now would be CAD JPY also to the upside. Euro JPY to the upside. Pound JPY also to the upside. All right. So all these pairs versus the Japanese yen should be headed up, in the coming weeks. So we have lots of pips to the upside. So you have nothing to worry about. All you have to do is just make sure that you turn on the post notification, so that once I drop a YouTube video like this, you're amongst the very first few to see, and prepare yourself accordingly. All right. So the market has put back into the demand level here. So what we want to see now is a decent bounce. Once you see a nice bounce, a nice 4-hour candle, break above here, that is a nice green candle, engulfing candle break above here, or rather bounce above here, then we can now enter this guy and then push stocks below. All right, first level target is still the recent high, and then subsequently we could blow into 2116, that 216 rather. So the next pair now on my list is Nasdaq. As I look to wrap up this guys, the next pair on my list now is Nasdaq. Nasdaq also moves in line with the S&P. All right, so it gave us something like a head and shoulders pattern here, neckline break. So you could easily expect the market to pull into these supply levels around here. So once this is all done and dusted here, you can start looking for selling opportunities if you're the counter trend trader. However, for me, I choose to wait for the market to come in here and we test this already created demand level here, and then I cannot smash things or it's through the roof. So my first level target for Nasdaq is 20,000.78 basis point, and then after this whole point here, we should actually see the market rally into 23,000 basis points. So the next pair now on my list, as I look to wrap up, which should be gold. So gold has been doing some golden things recently, bashing people on Twitter everywhere, man. So fear not. Let me just explain what's happening here on gold. So remember, guys, I've been talking about this demand level here for quite some time, and then I said to you guys in my recent video that if gold fails to remain above this bar here, and then if for some reason this turns to a fake out, the market could easily melt, and that was what happened. Right? Whenever you have the market break out of a range and then gives you a fake out that that is a false breakout or maybe a breakout and then it close back down below, it tends to move exponentially in the opposite direction like this. So it just closed back down below and they just melted. Now this level here is quite solid to look out for. However, if this level doesn't hold, okay, if this guy doesn't hold, we could easily see go drop all the way to 2001 However, that isn't looking likely because we came on here to give a double bottom here, neckline break. Upon the neckline break was where the first demand was created. Yeah, then the market rallied, then came back down. So this is just to tell you that this level held. Okay, so the market came back down to test, and then this also looks in line with my Fibonacci, like so. So everything is actually pointing to the upside. Now first level target for gold will be 2,483.740. Then subsequently we will rally into $2,600 per ounce for gold. Next pair on my list now is silver. So for silver, it's quite simple, guys. It's very simple. I have been calling silver to the downside for a very long time now, and then this seems to be happening right now as we speak. So it doesn't change my bias. I'm still very bullish on this guy. However, this was the most solid demand that was created, and then technically speaking, the market ought to have come back to testing, which is exactly what it is doing here. So we have a trend on our hands here. So from swing low to swing high, you can see that this laps perfectly with the $26 per ounce, for silver. So now what we need to see now, we have a double top here, neckline break. All right. So now should you be looking for day trading cells? Yeah, you can if you want to. Just wait for the market. If at all it to pull back, wait for the market to pull back to this supply here. All right. So once the market is here, you cannot go down to your 4-hour time frame. All right. Wait for rejection candles or maybe an engulfing candle. Then wait for a bounce and then hop on this guy. But make sure that you're risking very little of your capital, because the overall trend is still very bullish on this guy, and anything can happen if you enter here. So as for me, I prefer to wait for the market around my $26.500 per ounce. So once this is tested nice, I'm balanced well, I cannot come on here and then blow things through the roof. Okay, so I'm very bullish across the board for the pound sterling, EURUSD, for the S&P, for DAX, for NASDAQ, for gold, for silver. All right. So now the last pair on my list now is the dollar index. So let's talk the dollar index, for some time, like what is actually happening with the XY. So for the XY, it's quite simple to understand. All right. So we have failed to make a high. We failed to make a high, okay, and that is exactly what is actually causing the whole stagnation. So I was very bullish on the XY until when I zoomed that, I got to discover that we have failed to make a high on 3 consecutive times. All right, so this was the high here, okay, first high, okay. So mind you, this was the initial high here. So we failed to make an equal high here. Instead we come here to put in a lower high. Now after putting in the lower high here, we came on to put a lower high again, and then this is the third high, which is even lower than the previous 2 highs. So this is pointing south at the moment. However, so this is also a double top. Now, mind you, weekly time frame, this is also a double top. This is a clean double top where how the market failed to make a new high. Okay, now what tends to happen is after this move like this, the market tends to pull back to at least half of the entire length from here to here, like I said earlier. So what I'm waiting for now is for this guy to pull back. For those of you guys that they like to use this as a conference, you can choose to wait for the market to pull back into a 105.200. Now, if this happens, obviously this would send the euro dollar lower. However, if the market does, if it fails to pull back and then just continue to drop lower, then you're sure of your euro dollar longs. However, long story short, yeah. So my projection for the DXY is that we could easily drop to the tune of around 101.500. All right. So that's that for the XY. Long story short, now if we do fail to stay below this bar and then for some reason break above it, then we cannot resume our bullish bias, and then start targeting the 107.3 for it, regions. All right, so guys, so that's that for this episode of our weekly forex forecast. So make sure that you click the link in the description there. Join the channel here, learn from the rest of the traders, and then also leave a like, comment, and make sure you share this video, because I'm so close to hitting 1K, guys. I'm so close to hitting 1,000 subscribers. I'm usually about, I think, 49 people away. So guys, make sure that you share his channel on your stories, on WhatsApp, on Telegram, on Twitter, on Instagram. Just get me to 1K, guys. All right, so that's all I ask for. Thank you so much, guys, and I appreciate it, and I hope to see you guys next time. And be sure to tune in on time, turn on the post notification, and then be sure to spread the word. All right, so thank you, guys, and peace out.